So I think the good news now is that we're kind of seeing the end of the order books, basically. The last tanker from Philly Shipyard will be delivered later this year. And I think there's only 2 or 3 ATBs still to be delivered early next year. So supply is basically, the supply growth is stopping. There's a good portion of the fleet, about 20%, which is older than 30 years. I think there's good reason to believe that a number of those ships will leave the fleet once they face expensive dry docking. So the supply-demand balance in the fleet that's currently oversupplied today, it will probably be much more balanced if you look at 12 to 18 months. So the supply side is something that looks controllable for the future. On the demand side, it's actually not that bad as you may think. I mean, the clean products trade is actually stronger than ever. Which takes up about half of the fleet, of the Jones Act fleet, for the ocean-going barges and the tankers. The crude, or demand for shipping crude, is what has been reduced in the past couple of years and has made the market softer today. We see that the activity in the Gulf, so intra-pad movements of crude, is basically back at peak levels, because shale production is also basically back at peak levels. The trade that's still lagging is the U.S. Gulf up to the northeast coast, which was probably using 5 to 6 tankers back at the peak, and today probably less than 1. That trade may come back if the spread between U.S. oil price and international oil price widens. We've seen recently, even before the hurricanes, that the spread between WI and Brent, to use that as a benchmark, had widened up to $4, and that's when it starts to get interesting. So more shale, we think, will lead to a bigger spread between U.S. oil and foreign oil, and that spread will potentially drive demand for Jones Act tankers, bringing U.S. shale from the Gulf up to the northeast refineries.